Okay, so in this video we're going to be talking about a very common question, which is when to sell your stocks. Now this will mainly be in regard to long-term investing, but I'll also touch on some other strategies such as some short-term plays or that kind of trading kind of mindset. And just before we get into the video, I'd like to remind everybody that I am not a financial advisor, and please do seek financial advice if you need it. As well as that, guys, if you could take 1 second to drop a like on this video, it really does help out the channel and I'd really appreciate it. So I've broken this question down into 3 main scenarios, and then I'll give my kind of overarching principles when it comes to selling of stocks as well. So in the first scenario, we'll look at when you have a stock that has run up quite a bit in the last few months. Let's say it's run up 20%. In the second scenario, we'll look at kind of the opposite to that. So we'll look at a stock that has been down 20% in the last few months. And then in the third example, we'll look at a stock that has pretty much remained stagnant, maybe down 1 or 2% or up 1 or 2%, just kind of staying at that sideways trading level. So in that first scenario where your stock has run up quite a bit, as we said for this example, 20%, one of the questions you should ask yourself is, do I think that this stock is unjustifiably high right now? Now this of course will depend on the individual and their kind of different opinions on the stock. I can give an example in my case for Tesla stock back in January when it was at around that $880 level. For me, I thought the stock was approaching levels that were a little bit unjustifiably high for the time. I do think the stock will be worth that and more in the future, no doubt. But for me at the time, I felt it was getting a little bit too high. So in that scenario, what I did was I basically rebalanced my portfolio a little bit. I shaved off some of the profits that I had on Tesla stock and reinvested that into some other stocks I hold in my portfolio. Now the aim of this strategy is really that you're either anticipating the stock to have quite a bit of a fall, so it would be a good idea to take that money out and reinvest it elsewhere, or that you could hold that cash with the hope it would fall and then try to rebuy back in at a later time. Now of course there's a couple of things you need to think about here. First of all is that we could miss out on some gains because the stock may potentially not pull back. Second of all, there will be a taxable event when you do sell your stock, so that's something to keep in mind. And third of all, it's important here that if you still have conviction in the stock, make sure you don't sell out of all your position. For example, I only shaved off 1 or 2% of my position in order to reinvest that, and actually did get quite lucky in that it pulled back quite soon. Actually in March it pulled back, so I was able to add a bit more to my position on the dip. But if the stock did run all the way up to 1,000, I would have been okay as well because I still had most of my position there. I was just simply taking some of the profits and reinvesting them. Another thing to ask yourself in this scenario is, are you happy with your current gains? Is this what you expected when you first invested in the stock? If you are happy with them and you feel like your position has run its race and you think it doesn't have much more room to run, there's no harm in taking your profits and looking for a new investment opportunity. So again, the questions to ask yourself in this scenario is, do I think the stock is unjustifiably high? If so, it might be worthwhile shaving off some of your position and reinvesting it or waiting for a pullback in the stock. And number 2, am I happy enough with my gains to just take my whole position and try to find more investment opportunities? Now let's look at scenario 2, where we'll say that your stock has fallen 20% in the last few months. So one of the questions I would ask myself obviously is, why has it fallen? Has there been a genuine change in the fundamentals of the company? Has there been some kind of scandal, and is it true? Or is it the case that there's just general market sentiment, the whole market is down, so in turn this stock has run down a bit? In the case of the first example where there'd be a fundamental change into the stock and how the business is ran, it would definitely be easy to justify cutting your losses and selling your positions. Of course, this can happen to any company, so you're not really to blame there. But if it's a case of just market sentiment where the whole kind of market is down or the whole industry is down, it may be an opportunity for you to buy more of the stock. And another question is, do I think this stock will rebound? What kind of timelines do I think this will rebound in? And am I willing to take that risk? Now, of course, nobody can time the market, but just on your own general experience, you may have an idea of how the markets are going to work or what market trends are coming up, maybe some upcoming catalysts. So you can kind of plan out for this stock. Do you think it will rebound, or do you think it has further to fall? And this is actually an example of where one of my core investment principles comes in. So for this, the whole idea is that I try to avoid buying any stocks that if I bought it and I seen a dip, I wouldn't buy more of. Now, of course, if something like the fundamentals of the company change, you can't blame me for there, and I have no problem abandoning that thesis and pulling out of my money if there is a change in the fundamentals. But in general, if there's just a market sentiment dip or some short-term catalyst that has sent the stock down and I still think it'll be higher in the future, it's a good opportunity for me to buy some more. So if you've bought a stock and you didn't have much conviction in it first, so you didn't do your research, you don't exactly know what the stock is or where it will be going, and you see it drop 20%, there's no harm in accepting your mistake and selling out of that position, because it definitely can be quite a headache worrying about this stock that you don't know a whole lot about and you didn't have that much conviction in from the start. We all make mistakes. Obviously, each day we're just trying to be less wrong, as Elon Musk would say, just trying to make the least amount of mistakes as possible, and of course we do learn from these mistakes. Okay, so now we'll look at scenario 3, where your stock is remaining pretty stagnant. So a good question to ask yourself here is, why did I initially invest in this stock? Did I think it was going to have a big run up? Did some catalysts I think were around the corner not turn out to be the catalysts I expected them to be? Or do I just think this is experiencing some sideways trading right now and it will explode in the future? Of course, if a stock ends up performing not exactly how you predicted and you manage to sell it for essentially what you bought it at, there's not a huge mistake there and you've still learned some things. Of course, the stock market's going to be some trial and error for some companies. They all have their different challenges that they need to face, and some will make it over them challenges and some won't. You can't be right every time. Another question to ask yourself in this scenario is there a benefit to holding the stock, such as a strong dividend? And finally, another question is there a better place that I could put my money right now? A stock like AT&T is a good example here, which basically just trades sideways all the time, but they do have a strong dividend yield, which is one reason why many investors invest in the company. Now, before going into some of my kind of overarching general rules, I'll just basically touch on the short-term aspect, some short-term plays that I do as part of my long-term strategy. So for these short-term plays, they may be stocks I don't have a lot of long-term conviction in, but I think there'll be some upcoming catalysts that could drive the stock price higher. Now, of course, these are very risky and I normally go in with small percentages of my portfolio when I do these. So for example, you can set a stop loss or a take profit. So let's say a stock is trading at $10. You could set your take profit for 10%. So that means if that stock reaches $11, it would automatically stop your trade and it would cash in that $1 per share. If you did that on 100 of them shares, you'll obviously come out with €100 profit. Then in the reverse, you can set a stop loss, which means if it was trading at $10 and it dropped down to $9, it would automatically cut off your position, so you'd only lose $1 on each of your shares. Of course, you can mess around with the percentages here. You could set a stop loss of maybe 20 and the take profit at 10, or vice versa, or whatever level of risk you feel like taking. Generally, that's what a lot of traders do. They set their entry and exit price, and if it hits that stop loss, they just sell out of it and try to establish a new position. They don't get too caught up in it or try to ride these plays out till the very end. If you do buy a stock in this short-term manner and it does reach your take profit, you can take them profits, and if you think it has further to run, you could always re-establish your position again. So here are just some of my final kind of overarching principles that I follow when selling stocks. Number one is to take advantage of tax benefits wherever you can get them, such as your capital gains tax exemption and things like tax loss harvesting. I've covered off both of these in my previous video called Pay Less Taxes. I'll leave the eye icon up there for you to check it out. The next thing is to avoid selling any stocks if you don't need the money anytime soon. As I mentioned previously, selling your stocks will obviously trigger a tax event. So if you can avoid selling these stocks and having that taxable event, try to do so. That's where an emergency fund comes in handy here, guys. I've covered these off my previous videos as well. But let's say you do need the money, you're going to buy a house, you're getting a car or something, you want to take some money out of your investments. A good thing to do here is to actually average out of the market, so basically plan ahead. Let's say I need my money out in 6 months' time. I'll start selling bits of my position each month in order to ensure I'm not pulling my stocks out too early or too late. Again, if I feel a stock is getting a little bit high, for example, if I have it weighted at 10% in my portfolio and it grows to 15%, I may just rebalance. Trading 2 and 2 is a great feature where you can just automatically rebalance your stock pies. So I may just rebalance that, take that 5% off and invest it into my other stocks in order to stay well diversified and not too overly weighted in any stock I don't want to be. Then for more short-term plays, make sure you have a clear exit and entry strategy in order to make sure you don't get burned too much on the stock. And then finally, I'll finish up on my previous note where I said that I only try to buy stocks that I have a lot of conviction in, and that if they drop lower, I would buy more of the stock, granted the fundamentals haven't changed. So guys, that's going to wrap it up for this video. Hopefully it did add some value to you. Of course, selling is not just clear cut. It really depends on the individual, their risk appetite, and their overall investment goals. If there's any tips you guys have for selling stocks, let me know in the comment section below. If you could take a second to drop a like on this video, and if you're new around here, make sure you do subscribe as well.